What's happening, guys? I hope everybody had a great weekend. We've got another Sunday video coming at you, this time for the 15th of August. I'm going to get right into a couple things, then we'll get into what we're going to talk about for the week ahead, as well as what's working, what's not in this current market. First and foremost, I wore my Center Point Edge shirt because they are giving away one free ticket. And every week, if you look in the description of the YouTube video or click through to the blog post, you'll see that I usually write out my thoughts. I will include the tweet, the only tweet that you have to retweet to be entered to win, and you could win a ticket to Traders for a Cause. That is the first, or not the first, that is one of many giveaways that we've been doing. You guys saw that we had, I think, either 3 or 4 tickets go out the prior week. We had somebody that wanted to sponsor a couple traders. We have another one that's coming up that a person can't make it this year, but they still want to buy a ticket and donate it to someone else. So just keep that in mind if you are interested in going to Traders for a Cause in Vegas this year. I know a lot of people wanted to, but obviously the tickets went pretty quick. So make sure you follow at Traders for a Cause, the number 4. On Twitter, and you'll see all those giveaways happening. We usually typically email as well, but just make sure that you're on Twitter and actually seeing that stuff as it comes out, so that you have the best chance to take advantage of it. The second thing, I haven't talked about it in a long time. We still do it, but Zach at Avidity Fitness, we typically do the workouts on Zoom. Saturday and Sunday mornings, 9, 10 a.m. and Tuesday and Thursday at 6 p.m. And what I'd like to do again is basically give people a reason to join, a reason to participate. So Zach has agreed that from here until Vegas will be 100% free. And if you come and complete, and we agreed this morning 18 out of 24, but I'm going to bring it down to 16. 16 out of 24. If you do 16 out of the next 24 sessions, meaning, maybe one week you can only go twice, and the next week you do 3 and 3 and 2 and 2. As long as you do 16 out of 24 of the next sessions, and there's 6 weeks to do so, 4 times a week, then I will donate $500 to Traders for a Cause. So you just have to come and put forth the work, and it will be a $500 donation to this year's event. And we'll also do some other giveaways too. So the folks that maybe go the most, if you come to all 24 sessions or 20, we'll probably do something like t-shirts, give away some IU, and all that good stuff. So hopefully that is enough to inspire a few people to join, but I'm willing to donate up to $25,000. So any of you guys that want to come and join, by you working out and doing it, it will benefit Traders for a Cause by $500. So give it a shot. And at least check it out once or twice. And if it's not for you, then so be it. But if you enjoy it, if you want to give yourself that that challenge to make it there, then do it. And you can also benefit at the same time. So other than that, let's switch gears, and we're gonna get right into sort of what we talked about last week. I think it still applies. I think that the timing of the video last week was crucial, and the week before. We talked about coin being the was sort of the fireworks, the start of the fireworks, but it was the warning shots. And did you listen to the warning shots? Did you see the warning shots and kind of take it in and say, okay, I need to realize that we're in a little bit of a very thin market, and I need to be on my A game as far as risk management. And you had that shown to you on coin. The following day, or I think the following day was CVNA, which was also super, super thin and went nuts. We had like BYND and a bunch of other names. This week we had DMS, we had PACB, we had DNA, and those were all really, really thin, just went up, literally doubled in 6 candles, and then, faded the rest of the day. So the big point there is you don't have to find the top. And, a lot of times my entries are towards the top, but it's after there's some sort of exchange and a retest and it fails, retest and fails. A lot of times people look at the charts and they're like, oh, that was, you say not to short the top, but that was the top. You have to realize how long 1 minute is, right? So if you're looking at a 1 minute chart or a 5 minute chart, you have to realize how much actually happens within that 1 minute. And to think or to have your key takeaway be like, oh yeah, you just shorted the top, but you say not to short the top. There's a monster exchange, and if you're actually, for example, on the DMS entry and the DNA entry, if you're actually in the room, you can see, that typically it's towards the tail end of that minute, and it's after particular action happens, after the exhaustion move comes, after it retests, once or twice, or there's just this massive exchange of volume, whether it's, a big cover coming in, whether it's buyer chasing, whatever the case is, somebody just exited like crazy. And now there's going to be some inventory to the upside if it continues to go. That said, you don't know how it's going to react, so that's why you want to let it kind of test a few more times versus assume that that's it, that's top, and it has to come back in. So I always let it continually prove before I start to scale in to any size. And typically I always look, where does it flush down to and come back? And wherever that level is, where it flushed down to, that's the spot where if it continually stays kind of, strong or trappy over it, you want to have your guard up. And then I typically wait until it starts to peak at that level in order to scale. And then we had NVTA, and NVTA I think was the one that snuck up on a lot of traders, and it's the type that you can sit here and say that you have this amazing risk management, but you never really know until it's tested, right? And I sat there and said I had the best risk management on Kodak, and I'm going to stop out and this or that, and then it comes into a situation where it's like, oh man, I wasn't expecting this, and I'm down more than I thought, but I can probably figure my way out of this. I'm going to hold it, and I'll scale in at the right time, and I'll do this or that. Did the same thing, on AMC in 2020 and 2021, and you get into a situation where you weren't expecting to be in that situation. You claim to have this amazing risk management, which 99% of the time, I do, you do probably, but it's that 1% of the time, that outlier, the time that you decide like, yeah, I can get myself out of this. You end up oversizing and you end up in a spot where you never would have expected. Now, the good news is that every great trader that I know, the comeback and the ability to regain your confidence after that happens and know that you've been there and done that and come back is crucial to taking your career to the next level. But you got to look back and look at the warning signs and see all those moments that you knew not to do that. When it was, for example, and these are never I told you so's. Sometimes people will take this sort of comment as, I told you so and this and that, and miss the actual point. And so, for example, in the room, we were talking about the 401 soak where, NVTA was coming in and, it didn't even test 4. There's somebody that was just plugged at 401. So what does that mean? That means that typically, any whole numbers or $half dollar marks end up being sort of emotional, where people have that fear that 4 is going to break, and if 4 breaks, then it's going to immediately flush, you know, to 380s or 350s. So they're nervous as heck and slam into the 4s to go ahead and get out. Same thing with shorts where, and I think SSR was on. It was actually. But same thing with shorts where they're like, I just want to get a piece before, you know, it cracks 4. Well, what if somebody's hidden buying at 401 and all those offers stack at 402 and, you know, then the swipe comes, right? You know that all those people are now on the wrong side of the trade. And so we were talking about that live as it happened. And does that mean I got long and I was looking for a squeeze and all that? No, not at all. And I wish that, you know, seeing that action could convert me into, you know, buying long sometimes. And sometimes it does, but most times it doesn't. I just know not to short, right? And so we had that perfect trap setup at 401, and then it went back up to 420, 430s, came back to 420s, and it actually even came back to 401 again. And the one thing that I said in the room is, if they soak hidden at 401 again and you haven't covered, be aware. And so, you know, that was the start of the first major trap. And then the same thing happened at 5, where they soaked at 501. And again, playing that psychological game where everybody's fearful of the 5 crack, because we know if 5 cracks, then it's going to flush quick, you know, possibly 10%, you know, where it goes down to 450 or something. And, you know, unfortunately, it didn't. It trapped again. So here you are, you know, fighting from the 4 to the 450, the 5, and it doesn't matter what size you were. Say you wanted to be 1,000 shares. Now you've got 3,000 shares. You're 3 times the size that you wanted to be. And now you've got range that is now 3 times what it was. And it goes up $3 more. So whereas you were risking maybe $300 to $500 or 3 to 5K or 30 to 50K, you know, now you're faced with a, you know, $900 or $9,000 or $90,000 loss, which, you know, you were aiming to risk 10% of that. You know, and like, how did you get here? So by going back and kind of reviewing all those moments where 1, it was absorbing, 2, it was trapping, 3, SSR stack, and they swipe the offers. But I think most importantly, 4 being, how many times did you know that you were uncomfortable, this isn't what you were planning, you were adding even though being super, super wrong, and all that kind of stuff. If you can pinpoint those moments and how you felt and those key words that you were kind of saying to yourself, like, yeah, I feel like I think it's going to pull back. It should. This doesn't make sense. You know, I'll do one more ad. You know, all these kind of things that are wrong. The sooner that you can pinpoint them for the next time, the better off you're going to be. And, you know, sometimes I see people saying things in the room and, you know, like, oh, man, this thing's been exhausting, but I think the trade's close. You know, I'm going to try one last time and I think it's going to crack this time. Okay, you think it's going to crack this time, you're going to try one last time. Why not just let it crack? Why not let it crack and then look at pops along the trend, right? Why are we, you know, just, you know, flipping a coin like, okay, maybe it cracks this time, right? So same kind of concept, and pay attention to, you know, the words that you're saying to yourself or you're typing or whatever, to make sure that you avoid that in the future, because it's not just an outlier move and loss like that. It's also after that. It's the opportunity cost. You know, there's this type of a move will be an outlier loss for a lot of traders, and then it's going to take you off your A game. And then the next day, had an A+ setup on that. The next day we had, or day after that, we had DMS and DNA and PACB and all these other trades that were just, you know, like kid in the candy store, like go for it, and it was huge opportunity. But if you had that happen to you the day before on NVTA, you're not in the right mindset, and you're nervous about, you know, maybe taking on a little bit of risk. You're nervous about stepping in front of another NVTA, and so it impacts your next trades and your mindset for, you know, the next short term until you're able to kind of reset and refocus. So just make sure that you minimize those outlier type losses. And the last point that I made last week was having that max stop. And the max stop isn't just to, make you upset when it hits and, maybe would have been right, but it's to save you from yourself, because we are our own, kind of worst enemy, in the sense that, you're going to do everything you can to kind of figure out whatever this loss is and try to, get out of it. But most times you're just putting on more risk, and it's either going to work or not. And if it doesn't, then you get smoked like NVTA. So just think about that. Not only do your actions today, create possibly a loss today, but it's the opportunity cost for later, that you're taking yourself off firing on all cylinders, and you're coming in nervous and less confident, and you need all of that to trade well. You need to not trade in a cocky manner, but you need to be confident, knowing that over the last 6 months, the year, 10 years, whatever, you know what you're doing. And most of the time, this trade is going to pay out. And if not, it's worth that risk that you're taking. But if you turn it into an outlier risk, an outlier loss, that's when, it really becomes a big issue. So that was really, the conversation that we had last week. I think it still applies to this week. I mean, the market, I think it closed 427 or something like that on the SPY, which is insane. I personally was thinking that, yes, we were going to kind of hang out a little bit lower and consolidate. And I figured we'd be, 6 months or 12, sideways. And here we are. We're going, back. We're almost not back to the highs, but, we're pretty much, getting there. I mean, if 470s was the highs or something like that, 480s. Yeah, 480 range. So, I mean, considering everything that's happened, we're not that far off. And, I think the last time, like we talked about, a lot of people were, very much hedged and anticipating. We talked about inflation and interest rates like every single day. The war, Ukraine, every single day. And so I feel like the more that people talk about it, the less it matters, right? The more it's already built in, the more it's already kind of anticipated. And who's to say that, that wasn't already built into the price that we were at? Maybe it would have been, maybe SPY would have been 600 if this stuff wasn't happening. So that's the thing about the market, is it never does, exactly what you expect. And, the beauty about what we do and, how I trade is none of that matters. It's all about volatility and coming to the market prepared and, finding your edge. So last but not least, you got to ask yourself, GOVX, TBLT, and APDN. How many were trying to find the top and getting chopped up and too aggressive and gave up and forgot to watch them this week? And if you look at those charts, you look what they did. And this is sort of the point of, let everybody else, get the headache. Let everybody else try to find the top. VEEE, big mover. Nice scan hit for the kind of breakout on Friday. I personally did not participate, but let everybody else try to short it. Let everybody else figure it out, because they're going to get chopped up, and there's better risk reward out there. And when everybody finally says, you know what, screw it, I'm good. I'm going to leave it alone. I've already lost enough. It's already been a headache, or I'm just happy to be alive on it. Well, guess what? Then you get the move. GOVX, TBLT, AVDN. Once again, the obvious move is not the profitable one. So just keep that in mind. And that's that. So let's get right into scan for the week ahead. All right, guys. So actually, before I forget, Scott Hacking. I might have sent you a t-shirt before, but either way, I've seen you've been posting a lot of trades and working hard. So and leaving a comment. So you've got the t-shirt this week, or scans, SCANZ, scans for the free month. So email me, webmaster@investorsunderground.com, and we will get that set up for you. As always, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. BBBY, I feel like, it's one of those where everybody just thinks it's going to be like AMC and, hammered into it when AMC was weak. And then we got the big wicks. It dips, comes back, dips, comes back, dips, comes back, dips, comes back. And these are the signs we look for longevity. And, do they need to raise? Probably. Have they been talking about needing to raise? Like on every, CNBC, I think Cramer's been saying it every single day. I think everybody knows that. So, again, the more you talk about stuff, the less it might matter. Yeah, sure, probably they're going to need to raise. But will people see it as super bullish that they were able to pull off a raise and they're not going to go bankrupt? So does that add value instead of thinking that they need to raise in the hole and it's going to be, terrible? Or do they have trouble raising and they need to do an ATM and they put out some big, PR and then they just sell it all day? These are things that I want to prepare for, but not necessarily get a strong bias for, because that's when you end up getting, run over. So ideally, this thing, I would love to see this thing have some sort of gap up and just keep, 14, 15, 16, and then on Tuesday or Wednesday we have some sort of gap 18 to 20. Maybe I'm just dreaming. But it's had a history of big moves. It knows how to trap shorts. It does it all the time. It actually had a nice move, now that I'm looking at it after hours, went all the way up to 14 before pulling back. But let it do its thing. The edge for me is when we have a gap up and a parabolic move. I can react to that, scaling if I'm right. If it catches and it starts to base, then I want to, end the trade. I want to, take it while I still have a gain, or at least, close it out as relatively flat as I can, because I can always get back in there later on. Remember, off the open is the time that you got to expect that it's going to be, 50, 60, 70 cents either direction. So be cautious forming a crazy bias. But this kind of volume, 50 to 100 million shares a day, this kind of range, it's far and few between, and I want to take advantage of it, just like you see on AMC and Mara, M-A-R-A, and Riot, those kind of things. The liquidity is amazing. And if you can join the trend, great. If you need to wait for some sort of parabolic move to take advantage of it, or the fails, whatever type of trader you are. And a lot of these are respecting levels in a great way. And when you might be covering into a key level of support, for some that could be a fantastic long. But it's just all about having that game plan and not coming in with too much of a bias on what you think should happen. AMC was fantastic. This is what I was talking about as far as like a gap up and some sort of reactive trade off the open. It ended up being a fantastic trade, as you guys saw on Friday from the entry plan. And then like later on, this is the kind of stuff that I look for. And we draw these lines like all the time. But you're looking for, where is it channeling? Where does it break down? Where is a good exhaustion zone, over 26s, and where is a good breakdown zone under 2570s? So, this had a nice unwind at the close. I did not participate in it. But those are the types of situations that I look for to take advantage of. So, keep an eye on AMC every single day. I think for me, I'll be looking sort of in this range over here. We have basically some support around the 24s. We've got some possible exhaustion in the 2480s. So ideally, we get a gap up, 2480s exhaust out, and then it starts to fade back off. That would be ideal. We've got the 8 dividend, I think, on the 19th. Don't quote me on that because I don't know off the top of my head. But that's the catalyst. So do they create some sort of squeeze and shorts don't know what to do because the 8th dividend's coming out and they're also going to be short the 8th dividend? Or are they going to use the liquidity to sell into this event knowing that it's just kind of a game? And so again, go in with an open bias, look for that opportunity. And each day that I've been hands off. If I trade it pre-market or if I trade it off the open, it's because it has a big pre-market move. You know, same thing, BBBY or AMC. Where you get in trouble is kind of trying to anticipate it on lower volume, lower range pre-market, because then off the open it screws you up. FUBO. I think that this one can continue to go. I'm not suggesting that it has to pull back by any means, but when it does, I do think that it's going to be a very big opportunity for 50 to 70 cents a share. I feel like the day that it's up 20 or 30 cents green, it could close 50 cents down. That's what I want to be prepared for, but you can see the dips are getting soaked. This one has that sort of cult-like following. Everybody's buried from, for a very long time now. So there is that ability for it to potentially pop back up. And I mean, really, it doesn't have too much of a resistance until, maybe 6s or even into this area right over here. So maybe 450 range. So ideally, it squeezes out and we get 456s and we have a couple 100 million share days or something like that. But highly unlikely, and it's very dependent on what the market's doing. Market's going straight up right now. Shorts are, taking off risk, and a lot of the memes are going. So it's just sort of expect the unexpected until those things cool off. And I'm not going to take my eye off it because I do think that it's going to be a really big trade. Don't force it, but I do think it's going to be big. V. I think that a lot of people got caught on this one, especially the swing shorts. So I do expect, if you notice with like APDN and GOVX, every time something was about to kind of break out, it just was aggressive. And it's just because it's so crowded to the short side that, these pops are super, super aggressive. It makes it look bullish, then it sits right back. But it's just taking out shorts one, kind of candle at a time. So in a situation like this, you've got a nice big move, and pretty much every time it kissed or went under VWAP, it reclaimed and broke out. But then you've got this sideways action that we talk about all the time, where if this thing's not making new lows, then you want to be cautious. And a lot of times people, this was after hours, but a lot of times people ignore that it's been going sideways for 2 hours, 3 hours during the day, and then they get, squeezed out into the close. This is no different. So now, the shorts, they got a good entry maybe, or they averaged in and they're just trying to make it back. And then we're sideways all day and they get punked. So for me, I'd be watching probably up towards the 9 level. I'd love to see him push 9, parabolic move, and then possible fail fall through momentum on Monday. And it looks like, pretty much 8 to 9 range. Towards you don't want to put yourself in a position, in my opinion, where you're looking to get short and then you're going to stop out at 9, basically, right? So maybe you start in at 870s, 880s, and you oversize, and then you cover at 9. Meanwhile, it fades off the rest of the day. So for me, we went over it on a broadcast recently, the box, the general area that you want to get short. And, it doesn't need to be one entry. It could be, this general area is where I want to start into the trade. And then as it confirms, the next general area that I want to start to scale into is over here, and so on and so forth. So that's kind of how I would treat this trade. But just make sure that you're not putting yourself in a position to get just stopped out right at a key level. And I think a lot of people do that. They get tested and then they get squeezed out. Other than that, we've got this NVTA, which was a very nice trader on Friday. Offered a really nice opportunity and flushed out. And then once again, it punked all the overstay shorts that wanted more and didn't want to respect that this thing was very, very crowded. So ideally, we gap up and we go 550 towards VWAP. The VWAP obviously is this line right over here. So in an ideal world, we're talking 550 to 560s range as sort of a blow-off move. And then I do think that we'll start to fade off. I think that this trade is a little bit too big, but I think it just got a few, and by a few I mean a lot of shorts on the wrong side. And now, trying to make it back. worked out really, really well the following day, and then everybody that was patient trying to let it continue to work got, smoked again. So, there's a lot of things that you can do here. This is not by, kind of chance where this flush came into support, came back, finally broke under it, but guess what? It peaked out at that same level from before. So, make sure that you're looking left. Make sure you have these kind of things on your charts. And it doesn't mean that it's going to stop there, but it means that it's a good spot to take into consideration and possibly use as as a potential top. Or if it starts to base there and firm up, then hey, you could have an outlier move. But I do kind of see this one failing once you forget about it, just like APDN and GOVX and all those other ones. I think that it might flush off any morning move, and I think that might be a good cover. And then come Thursday, Friday, when no one's talking about it, you might start to see some action, just like GOVX daily, right? Similar situation. Everybody's trying to figure it out. They finally give up, and guess what? We're at the lowest point anyway. Same thing, APDN. If you guys remember, they raised at 4. Everybody that was positioned for a raise in the hole got squeezed out, and then there was a couple days of PRs and randomness, and then no one's talking about it. Everybody left. Everybody gave up. They said, screw this. This was too hard, and here we are. And then the last example of that is TBLT, where we've got this next squeeze out, and everybody tries to nail it. The volume's there, and then it starts to kind of get off people's radars, and here we are. Same deal. So that's 3 good examples of you're not letting things slip off your radar, looking left, using those prior levels. You can see that this day over here comes down, it ramps up, pretty much tests back towards where it closed, and then sits back, and then it's gone. And we had that a lot with APDN and GOVX. So keep that in mind when you're trading. And all of these TBLTs, APDN, GOVX, those are all potentials. It's like kind of quiet unwinders off any day that it has maybe a 20-30 push, and then it stays heavy. If it starts to firm up, that's when you want to scratch out or move on the trade, stop out before it becomes something that you didn't want. SIGA price alerts, it's nothing. Just because it keeps going up does not mean that you just keep going back to the well and trying to figure it out. Typically for me, I trade the big days, the big action days. I'm either going to join a trend when it's fading down, or I'm going to wait for those parabolic days for it to go, rip, start to go faster, and then sit back. Then switching gears into the continuation side of things. Nice continuation idea on scan on Thursday for Varu. Broke through a lot of resistance. So at this point, I think it's good to do a little homework and research how SIGA went. We pretty much have the same move here on SIGA. So is it possible we go 2022? For sure. The higher it goes, the more it goes straight up without correcting, the better short opportunity later, just like we had on SIGA. The stuff that gets my interest for an A+ is the stuff that doesn't, come back in and come back up, come back in, come back up. It's the stuff that goes up and up and up and up, and there's no correction, because the day that it does correct, it's going to be fast and lethal and blow out a lot of stops, and therefore be, in many cases, instant gratification, which is, what I'm looking for on those particular setups. Then we got VCSA. Very interested in this one as a potential long. No position at the moment, but did a nice little dip. Came back up through this level over here. As long as 460s is base and starts to firm up, I'm interested in it. It could be one of those moves that takes 2 weeks, but it gets to 7, 8, 9, something like that. AMTD, we've been talking a lot about. It's something that you want to assume fails. I feel like a lot of times people assume that stuff has to happen. So the way that we've been talking about it in the room is, every time it gets to 240, 250s, you got to assume that it's going to peak out. And if you are participating in the flush, and there's been plenty of them, the 220, 230 range, and it gaps up and it's got that push, you want to make sure that you're exiting either some, the majority, or all, and not getting top heavy and just adding to add. This is one of those where I think that there's a lot of back holders that got stuck, and we need either a PR or some sort of massive move on HKD. HKD, I said, if it goes circuit to circuit to circuit, then we need to watch this one. It's circuited a few times, but only once. So there's not that demand that it's like, oh man, it's going back up and we got to chase AMTD. So you don't want to assume that that's going to happen. You need to wait and let it happen. And so that's that. But definitely watch. I would set, if you're not involved yet, I would set price alerts 240, 250s. The day that it kind of goes 270s, comes back 250s and it bases, goes up to 275, comes back 260s. That's the day that I care. Otherwise, be cautious thinking that it has to do something because, as you guys know, it's been, nothing for a very long time, and then it gets some crazy momentum. But I do think it's going to have a massive bounce. It's just a matter of working out all the folks that are anticipating that monster bounce. And once they finally give up, then, typically you see it. And a good example of that was, the RDBX trade where, which is the example that I used. It tried over here, and it tried even this day here. It went straight up and then sat right back down, came back down, worked out all those dip buyers, and then bam, it took on a huge move. So that was good there. By the way, RDBX closed at the lowest point after that news hit at 345, which was a nice short opportunity, I think last Friday Wednesday or Thursday. Kirk, oldie, but a goodie. I was long this. I don't have any more, but definitely watching if it starts to base over 4. Same thing, SONM. No position, but clear buyer and tape. Nice breakout. As long as it holds over 82. The reason I said 82 is kind of look left. Where was the prior resistance? We are now over that prior resistance, and as far as extended breakout, something over 90 cents or so. But got a few other charts, EMBK, DraftKings, Mara, the ones that I kind of watch daily. GOEV is also impressively holding up too, came back pretty nicely. But there's charts just to kind of go through. AFRM straight up, no big corrections. We've got Mara if Bitcoin comes back. It's just good to remember and refresh your mind every single time that these things start to get on a run, so that when and if you see an opportunity, you can go ahead and take it that much faster because you've already seen it. You're already familiar with what it looks like. It takes one step out of the thinking. So anyway, if you guys have questions, leave a key takeaway with the timestamp. And then if you have a question, feel free to add it to the comment. I'm going to try to answer a few questions from the YouTube channel on next Sunday's scan. So that's it. Have a good weekend, and we'll see you guys in the room on Monday. Don't forget to check the description to retweet the Traders for a Cause raffle, and make sure you're staying up to date with every time that we are giving away tickets. And if you do want to get on the waiting list, and Zach will email you, Zach at traders4acause.org, and anytime a ticket opens up, he will definitely email you as well. Last comment, Avidity Fitness, don't forget, $500 for everybody that completes 16 out of the next 24 sessions starting on Tuesday, and I will have a link for that to sign up as well. All right.